Estimating market value. There are three ways to do it. Comparative market analysis is the primary way for 1 to 4 unit residential properties. Then there's the income approach using capitalization rates, and that's generally done with commercial property, industrial property, or very large residential properties. And then there's a cost approach, which is not generally used in real estate investing. It would be like with very old buildings, churches, cathedrals, or buildings that have no way to really value because nobody's trying to earn money with it. So we're not going to really use that. But today we're going to focus on comparative market analysis. So let's take a target property. Let's take this average home, 1,500 square feet with 3 beds, 2 baths, and maybe a 5,000 square foot lot, listed for $160,000. Pretty average in average neighborhood. Now it's easy to estimate its value when there's a lot of comparable homes. So we're going to go online, look, and find recently sold homes. You can find them on MLS or Zillow or other websites like that. And you're going to pull at least 3 comparable sales. Now in a neighborhood with a lot of similar homes, like in this example, they're all 3-bed, 2-bath homes, similar square feet, similar lot sizes, and they're selling for similar prices. We could guess or estimate that this property is probably worth somewhere between 150 and 155. And you might just average it out and say it's worth 152, 500. So we'd say the property is listed a little bit above the market value, and you would try to negotiate it down into the lower 150s. Not hard. But sometimes there aren't a lot of comparable properties that have sold recently in the area. Like in this example, there's a property with the same number of bedrooms, but it's way bigger, a lot more square feet. And it's sold for a lot more money. There's another one that's got the same or similar amount of square feet, but it's got an extra bedroom. And there's another one that has an extra bedroom and a lot more square feet. So how do we get what our property should be worth, the one we're looking at, based off of a number of different comparables? And this happens a lot, actually. In many markets around the country, you're going to run into this problem. So let's start by listing everything out. And these are just some of the criteria that I'm using as an example. You'll notice some of these properties have an attached garage like ours, and some of them don't. So these are other factors you would want to include in your CMA. I'm not going to include that. I'm just going to talk about the fundamentals of how you do a CMA, and then you can apply that towards any of the differences. So you could apply it to something as small as having fireplace or not, to something big like having an attached garage versus a detached garage versus no garage. So just for the basics, we're going to list out the differences: square feet, beds, bathrooms, lot size, and the selling price. Now what you need to do is try to identify what each difference is worth. So let's compare comp 1 and comp 3. The square feet are the same, but one has an extra bedroom and the other one has one less bedroom. The difference in price is $20,000 between the two. Let's go back and take a look between 1 and 3. One sold for $220,000, one sold for $200,000. They have pretty similar square footage, to 2,200 versus 2,100. And the key difference is that 1 bedroom difference. So we could estimate that a bedroom is worth about $20,000. Now, I might not just come up with this number by just looking at 1 or 2 different properties. I might look at a few and try to see what 1 bedroom is worth from a few properties. Let's look at the next one. The other difference is square footage. So how do we estimate the difference in square feet? Well, I see comp 2 and comp 3 have the same number of bedrooms and bathrooms, and the key difference between the two is the square footage, 1550 versus 2100. So I might look at these two and say, what's the difference in price and what's the difference in square footage? And there's a 550 square foot difference, and there's a $45,000 difference in price, which is just under $82 a square foot. You do this across a few properties and you can find out that if all things are equal, the difference in square footage is worth about $82 per square foot. So now how do you take this information and try to come up with a comparable price for these properties? And you actually do it in a little bit backwards way, or it might be a little bit counterintuitive. So we're not actually going to adjust our property. We're going to adjust the comparable properties and make them either drop down the numbers or increase the numbers to make them the same as what our property is. So let's look at comparable sale number 1. It has 2,200 square feet. Now, if we drop that down to 1,500 square feet, what would the price be? And at $82 a square foot times the difference is about $57,000 difference. So we subtract $57,000 from the price. Everything else is the same or similar. And so we take the $200,000 price and it now becomes $143,000. So if this house had three bedrooms, 2 bathrooms, and was 1,500 square feet, we believe it should have sold for about $143,000. Let's do that for the next property. It was 1,550 square feet, which is just a little bit larger. So 82 times that 50 is 4,100. But it has 1 extra bedroom as well, which we determined is worth $20,000. So we're going to subtract that $24,100 from the selling price, and it gives us 150, just say 151. So if this house was actually 3 beds and 1,500 square feet, we estimate it would have been sold for about $151,000. And then we'll do the same thing over here. There's a large difference in square footage and a bedroom difference. So we're going to subtract that almost $70,000 from that selling price, and we're going to come up with another one worth about $151,000. And then from this information, we're going to be able to estimate a price. Now, I might say this property is worth about $150 to $151. This one, to me, looks a little bit of an outlier, a little bit lower, where these two are very, very similar, right at $151. But then again, I also wouldn't have done this sort of CMA with only 3 properties because of the large number of differences. I would have gone and got a better number for my bedroom price or for my square footage price. So the more differences there are, though, the more comparables you're going to need to find, because you're going to need to attribute a value to each difference. So what is an attached garage worth? What is a fireplace worth? What is a bathroom attached to a master bedroom worth, for example? And you can go on. And that's where the art of the CMA comes in. Not all differences are worth accounting for. You can't miss the large ones, but you also can't spend all of your time trying to account for all the small differences. It's just impossible. So you need to figure out that balance of what you need to include versus what you should exclude. Now, usually, in my experience, you need to count bedrooms, you need to count square footage, and you probably should account for an attached garage versus no garage. Now, pools and other things can be a difference as well, and in every market there's going to be different things you need to account for. But you're going to have to figure out what works in your market for what additional things you should include. But with this basic understanding of how to do a CMA, you can now estimate the value of any 1 to 4 unit residential property just by using this strategy or this technique you're armed with that ability to adapt it and adjust it to what you actually need to do in order to estimate value. So you can double check your real estate agent and if they're actually giving you real numbers or if they're just making it up to try to make a sale.